Hello, and thank you for joining us on the Optimal Wealth Podcast, where we discuss creating passive income through real estate. Our mission is to help educate investors on how to grow wealth and invest passively. My name is Jared Alexander, and I am a passive investor, currently in 6 syndications as a limited partner. I am also the founder of Optimal Equity Group, which is a real estate investment firm that was created primarily to help educate the passive investor. We do that in a couple of different ways. One is we provide education to help give you the confidence to get into the passive investing space. And two, each episode we will interview amazing guests that explore the strategies, insights, and secrets used by successful investors. Whether you're a seasoned investor or just starting out on your real estate journey, this podcast is designed to help give you the confidence and knowledge you need to make informed and profitable decisions. Welcome to another show of the Optimal Wealth Podcast. And today I'm super excited to have our guest today, Jeremy Dyer. Jeremy, welcome to the show.
Yeah, thank you so much for having me today.
Yeah, thanks for being here. And a little quick background on Jeremy. So he's got a Bachelor of Science degree in marketing from the Carlson School of Management, having consistently attained top sales professional designation as a high-performing sales associate prior to launching a passive real estate investment company, Starting Point Capital. So Jeremy has extensive experience in real estate, both as an active and passive investor, which I'm excited to get into, Jeremy. He's a limited partner and now totaling over 4,000 multifamily doors, over 24 passive real estate deals, totaling over $400 million worth of real estate. And if I'm not mistaken, Jeremy, I think that number's increased probably since you've updated this here, huh? But
yeah, it sure has.
Yeah. And then Jeremy resides in Lake Elmo, Minnesota, with his wife, 4 children, and can't forget the dog Bosco, and enjoys coaching his children in sports, traveling, date nights, challenging his mind and body, and thought-provoking conversation, which, Jeremy, I could definitely relate to a lot of you on that right there in that one sentence. So, but if you could, for our listeners, explain a little background of, where you were at before transitioning into real estate, how you started on the active side and where you're at today.
Yeah, no, I appreciate that opportunity and thank you very much. So, I really got started back in real estate in 2012. My wife and I were blessed enough to be able to pay off our dream home by the time we were a young age of 23, 24. Had the 40-foot RV sitting in the driveway. Had a couple of kids at the time. Watched an HGTV show on house flipping and decided that we were gonna, go buy the ugly house down the road, fix and flip it, and turn it over and make a nice profit, right? It really wasn't necessarily about the money at the time. It was more the side hustle. It was more about kind of having a hobby, something that my wife and I could do that we really enjoy. And that was, being invested in real estate. And things were going well. By the time 2015 had rolled around, we had fixed and flipped a few houses at that point. We doubled down on kids. Okay. So we went from 2 kids to 4 kids. Life was getting really busy for us at the time. And I looked at my wife and I says, as much as I'd love to, scale up a real estate portfolio, of single family houses and continue to scale up, the fix and flip business, the challenge for us at that time was that I just didn't have any additional discretionary time in order to invest building that business while working a full-time W-2 job as a high-performing sales professional and balancing being a good husband, being a good father to, at that point, 4 children. So it was really back in 2015 that we had made the decision to pivot away from active real estate investing and instead go completely passive. So in 2015, we made our very first investment in a private placement real estate syndication. At that time, I didn't even know what the word syndication meant, other than it was some form of group investing, right? So we really, at that time, also very much used the shotgun approach. Okay, I didn't know much about it. I just knew that I liked and trusted the sponsor, the lead sponsor, who was acquiring the asset, looking to raise equity, from family and friends. So we held our breath, we plugged our nose, we made that first investment back in 2015. And we then waited a few years. Why we waited to make our second investment into a private placement real estate syndication is because we wanted the strategy to prove itself out. So it wasn't until 2019 where we had invested a second time, because we waited for that first deal to go full cycle before we made that second investment. The first investment went great. It exceeded what the sponsor had projected, those returns to look like for us. Obviously, I learned a lot about tax benefits at the time. That's not why I got into real estate, but it's why I stay in real estate, right? It's because of the depreciation loss activities, et cetera. So now you fast forward to today, we made a commitment on our 30th investment most recently. So we're now in 30 deals as limited partner investors. And we now are in a very similar position that you're in that we are looking to educate, others in our personal and professional network about the benefits of passive investing in real estate.
Yeah, that's awesome. Thanks for walking us through that. And I'm curious, so back in 2015, when you came around, did you just happen to know somebody, like a friend or family member that was investing in this group? Or did you, start doing some due diligence on other ways to invest in real estate? Or how did you come across this operator? First question. And then second question, how did you feel comfortable? What was your due diligence after you found the operator, feeling comfortable to transfer that money?
Yeah, it's a great question. The answer is really networking, and specifically in my case, it was networking at a hockey rink. Okay. I just happened to be a coach on a couple of different hockey teams for my boys, and one of the assistant coaches just happened to be a lead operating sponsor of a project that was coming up, and the timing was good for me because at that time, we were also ready to step out of active real estate investing and really go passive. And so it was really that operator that gave us that first, opportunity to deploy capital, into his deal. From a due diligence perspective, I really didn't do a lot of due diligence on the sponsor other than the fact that I knew who they were, right? And I trusted them, and our kids, play together, and they still play together, today, almost 9 or 10 years later. So certainly my due diligence on that sponsor has been a lot more over the course of the last, 9, 10 years. But prior to that, my due diligence was really limited. Okay. Because, I hadn't invested time at that point to get educated by listening to podcasts, reading books like the Hands-Off Investor book by Brian Burke, which I highly recommend all, new investors, novice investors, read that book to really get educated on investing in real estate syndications and why it's so important that you do due diligence on the sponsor before investing, because at the end of the day, you're not investing in the shiny pitch deck. Okay. You're not even investing in the projected returns, because the truth is the sponsor is not going to hit those projected returns. They're either going to exceed them or they're going to fall short of what they are. Right. Yep. So really more than anything, you're really investing not just in that sponsor or that lead sponsor, but also the team that they're surrounded with. Right. Because most of the time when you're investing in real estate, it involves a team. It's a team sport, right? So just because the lead operator, you might know, like, and trust them, and you might be comfortable with what their business plan is overall, the truth is that they're not the ones that are on the front lines. They're not the ones that are swinging the hammers, renovating the units, stripping, the kitchens down to the studs. They're not the ones that maybe are directly sourcing the materials for the renovation plans. They're not the ones that are evicting tenants, okay, or moving tenants from one unit to the other. They're not the ones that are having to deliver news to a tenant that you need to leave. We're not renewing your lease because we need to free up your new unit to renovate, right? So it's really that whole team, that they're surrounded with, which is incredibly important for investors to understand that it's really that team that you're investing in more than anything.
Yeah, no, that's a good point. And I think you summed it all up with the know, like, and trust. I mean, that speaks a lot too, especially just meeting a guy that you coach with, right? His kids, and you build a relationship over there, but wiring $50,000 over to, is a totally different deal, right? So, and I kind of had a similar experience. Actually, partner actively, with the Rise 48, right? And my first deal was through them, and I had a friend that I know really well that was investing with them, and they made an introduction to Zach. And I literally printed off 20 questions off the internet of what do I ask a sponsor operator, and kind of a highlight of what a good sponsor will do is he answered probably 15 of those 20 questions without me even having to ask. Right. And just made me feel comfortable. But again, you're investing in the operator and the sponsor because anybody can take a really good deal. And like you highlighted, Jeremy, with the construction, who's boots on the ground, how are they managing the asset? There's a lot of different factors in that. And if they don't have these teams in place, those deals can really, you can really run a good deal to the ground if that's not set before you're buying these assets. So yeah, thanks for that explanation. And so transition. And so knowing what you know now, after 30 investments, since 2015, now you're still working your W-2, obviously you made the shift because it's a lot more hands-off approach, and to that point about the book, check out Brian Burke's book because they definitely go into a lot of detail on what to look for and how to vet these operators and just the lens through what a limited partner looks like. But how are you educating others today just on getting into this space, especially during the markets we're at, right? 2015 looks a lot different than it does here in 2024 with the interest rates being the way they are, the economy, we're going into an election year. How are you talking to investors about that? Because there's definitely some fear in the marketplace going on. And so, yeah, what are you educating investors on now?
Yeah, no, I really appreciate that. And the truth is that, I talk to investors all the time. I'm in 30 of these deals right now. Right. Okay. Some of them are going to be home runs. Some of them are going to be doubles, and some of them are going to be base hits. And we just hope that I don't lose any money. Right. Yeah. So there's risks involved in all types of investing, right? Whether it's Wall Street or Main Street, there's risk there, right? So people have to, first of all, obviously understand, that point. My 2024 investments are going to exceed the projected returns of my 2021 deals. They just will. Yeah. Okay. The reason why 2021 people were running into the fire when they should have been running away from the fire, right? Debt was really cheap. Interest rates were really low. Yeah. Nobody expected, that interest rates were going to go up 550 basis points in a matter of 16, 17 month period, right? Nobody expected that. No economist was out there, warning people of that possibility. Well, it happened. Okay. So the challenges that those investments face today is liquidity, right? If the sponsor didn't build in enough reserves on the front end, if they were over leveraged, maybe they did an 80-20 loan when, maybe a 65-35 loan to value, product could have been acquired at that time. So really the challenge with the deals that I did personally in 2021 aren't operational distressed deals. They're financial distressed deals, but not financially distressed because the operator isn't successfully renovating units, increasing rents beyond pro forma, right? That's not the challenge. Okay, the challenge isn't really on the operation side. The challenge is really on the debt side, right? Well, a lot of that risk, so to speak, on the debt side has largely been removed when it comes to deals that I'm now investing into in 2024 and 2025. Why? Because interest rates have stabilized for the most part. Could they go up again? They certainly could, right? Could we have Jimmy Carter interest rate days back again? We certainly could. I don't think that's going to happen. At the same token, I don't know that the interest rates are going to fall quite as quickly as everybody was projecting them to fall, right? That's why 2024 is a little bit more certain from an investor's perspective, because valuations have largely come down anywhere from 20 to 30%, depending upon the actual product, the apartment building, the piece of real estate, depending upon the location that it's in. Obviously, all those things come into play, but I feel a lot more comfortable investing in 2024 than I really should have been back in 2021. That said, there are opportunities to invest in all different stages of the economic cycle, which is why I'm a really big fan of diversification, right? So it's not just about investing with best-in-class sponsors, it's also about deploying a diversification strategy, okay? Compounding investments on top of one another. The one thing that I like about where we're positioned right now, having done 30 deals as a limited partner investor, we're going to be rolling out of a few deals every single year, right? Going forward, right? Because the sponsors that hold those assets today aren't going to sit on those properties indefinitely when the business plan was to renovate the product or property and sell it in 3, 4, 5 years from now. Now, it may be that they have to hold on to those properties a little bit longer than they had originally expected, but at some point, those deals are going to start to come full cycle. And that's when it really starts to get fun.
Yeah.
In real estate investing is after you've been in a number of deals over time and those deals start to go full cycle, they start to compound on one another. So it's not just a $50,000 investment into a deal, it's a $100,000 investment because you're deploying your original capital plus your profit into another deal.
Yeah, no, great explanation on that. And so I'm curious, and I relate to you a little bit, same with my 21 deals. I honestly was one of those trying to, jump in, right? And I did a handful of deals and I wish I would have. Hindsight's always 2020, right? But I don't regret that because it got me over that threshold and it got me involved in this space and I've learned a ton along the way. So it's been a great learning process too up to this point. And again, Jeremy, we're just continual learning and the market, and it's steadily shifting too. The market shifts, it's never a dull moment here in what we're doing. But if you could highlight, because coming from the sales background and the W-2, so what is, and if you don't mind sharing, what is your take on 401ks, diversifying in stock market, mutual funds, bonds, things like that? And do you still contribute to that or what's maybe the percentage of the portfolio allocation there?
Oh. Yeah, no, it's a good question. And it's not really a Wall Street versus a Main Street type discussion, right? It really comes down to diversification. So, I still participate in the company sponsored 401k and max that out every year. I just, like everybody else, is trying to find the next Tesla, Facebook, Apple stock to invest into, right? I still take, my financial advisor's advice with a bit of a grain of salt, right? Of course, because I know they're just trying to sell another, product and they want more assets under management. So I kind of get that side of the house. So I'm definitely not against, continuing to deploy my own capital in Wall Street related investments and products. But I really think that the right size portfolio is going to be balancing Wall Street investing with Main Street investing. Okay. And Main Street investing doesn't have to necessarily be that you're going to deploy capital in a multifamily value add property. There's plenty of other asset classes out there, whether it be self-storage, assisted living, retail, flex office, et cetera. But there's also other ways that you can get involved in investing in real estate. Maybe it means for a person listening to this podcast episode today, maybe you've got enough discretionary time on your hands to invest into a franchise business. So you're investing into the playbook of somebody else's, proven strategy. Maybe the brand happens to be something that's of interest to you, whether it's quick service restaurants or it's retail or it's some type of a home care service, right? I think that there's a lot of different opportunities really for the savvy real estate investor or just an investor in general to really diversify into multiple different cash flowing investments. I'm happy to say that my family owns 3 businesses, right? That cash flow. I'm happy to say that we also rent out our RV for $600 a night. We own a boat slip that we rent out for $15,000 a year, right? We're also involved in 30 investments as a limited partner investor, and the majority of those investments pay cash flow distributions every single month directly deposited into our bank account. So when we talk about things like financial independence and financial freedom, right, and replacing the dependence on the W-2, we're doing that, okay? But we didn't just start. We started back in 2015. So we're now 9 years into this type of an investing strategy, and now I can look back and really give myself a pat on the back that I got started 9 years ago. Okay. I should have started 19 years ago, right? But I started 9 years ago and I got that ball moving. It's like a snowball, right? The more investments you make into things that produce consistent cash flow, the more that you can then now look back and say, wow, I've now replaced, my dependence to a certain extent on having to earn income because I'm now receiving it passively. Does that make sense?
It does. Yeah, it makes 100% sense. And I love it too. Cause it kind of goes to it actually goes right to the name of this podcast, Optimal Wealth, right? And that's, covers a lot of different areas. It's not just multifamily, which, we focus heavily on, but you mentioned all the different asset classes, but we're not just talking about real estate here, even though we focus on creating passive income through real estate, as far as the podcast go. But I like how you talked about the businesses, the boats, just utilizing, there's tons of options, especially when you start getting into this space. You start learning of all the different, debt funds, just the list goes on and on. But I will share on top of that, if you are looking at getting into this space and you're brand new listening to this show and specifically this episode, is pick a niche, pick something first and invest in that. And then as time goes on, you can start to branch out to other areas. But I know for me, I started to get overwhelmed a little at first, looking at all the different types of investing that were out there. I think it's pretty traditional to start in single family or fix and flips, but yeah, just pick a asset class, invest in it. And then eventually, like Jeremy said, over these past 9 years, you branch out into all these different areas. So yeah, that makes total sense, Jeremy. And thanks for going into that. And I, like you, I wish I would have known. We both know a mutual friend, who's a lot younger getting started in this space. And I wish I would have known what I knew now, 15, 20 years ago. But yeah, hindsight's 2020, and the best time to start investing in real estate or anything is now, right? So, all right, Jeremy. Well, with that, let's go ahead and transition over to what I like to call the fire round. And I'm going to go through a list of 4 questions with you. And first one being, if you could recommend a book on real estate for investors and another book that is particularly good for cultivating a positive mindset.
Yeah, thank you for that opportunity. I did reference one of the books already. I'm a really big fan of the Hands Off Investor book by Brian Burke. I think it's a very conclusive, thorough book on the topic. Oftentimes I talk to investors, I've got 20 minutes for the phone call, but really what I want to tell them is what's in the contents of that book cover to cover, which would take me about 10 hours, right? So I feel very comfortable and confident recommending that book. And full disclosure, I am in the process of authoring my own version of the Hands Off Investor. That is not the name of the book, but soon to be published, hopefully by the end of this calendar year. As it relates to kind of the mindset, side of the house, I really like a book called The Psychology of Money. Maybe you've read that book. Excellent book on the topic of just how our mindset should, be focused on, really using money as a tool, right? Goes into a number of different, wonderful kind of examples as to where people's minds typically tend to go as it relates to their relationship with money specifically. So definitely highly recommend your readers go check that book out as well.
Yeah, no, great book. Yeah, I've read that. I read that as well. And congratulations on your soon to be published book you got coming out. That's awesome.
Yeah, thank you.
All right. Well, let's go into the next question here. Can you share a specific goal or dream that holds significance to you? Yeah.
Yeah, we're always about, giving back, right? So I don't know that I have any further goals and dreams other than, wanting to continue to provide for, my family in a big way, give them every opportunity, to succeed in life. Obviously, the rest is up to them at that point. But, we became passionate about, caring for orphan children when we were a little bit younger. Our first 2 children are biological. Our second 2 were adopted from Wuhan, China. Jet and Juliana came into our family when they were 2 years old. They're 11 today, so they've been with us for 9 years. They've been just a blessing to my wife and I and our family as a whole. And that's kind of one of those ways that we've tried to give back, and now we can be an encouragement to others that are considering going down the road of adoption as well.
Yeah, no, that's awesome. I think, when you're getting into this, it's like, you have to have a why, right? Why are you doing what you're doing? And, for me, like you, Jeremy, my family is very important. I grew up without a father in my life, and it was very important to me once I had kids to be the father I never had, right? And just be present in every single moment I can, even the little ones. And just made a world of a difference. And as a result of this avenue that I found in real estate, it's creating opportunities for me to have more time freedom and be more present and be able to, enjoy those moments more. So that's awesome. And so going into the third question, so how do you structure your day to maintain that healthy work-life balance, towards your goals, towards your why there? And do you have a morning routine that you can share with us?
Yeah, for sure. In full disclosure, I don't do it well. Okay. I am absolutely 100% work in process or progress there, but for sure I'm able to fit a lot into one day. That's for sure. I'm regularly, asked the question, how is it that you're able to balance, a full-time, high performing, sales professional job, manage a couple of side businesses, namely Starting Point Capital. How are you able to manage, 4 children, by the way, who are all homeschooled? Okay. Coach, hockey teams and lacrosse teams, and, still find, time in your schedule to date your wife. Right. So it's a challenge, right? But one of the things that really helps me is to really try to minimize as much as possible, some of the non-productivity type activities, right? So I don't Netflix binge, right? I really try to stay focused on being present, with whomever it is that I am with at the time, right? I also, don't stay up until midnight, right? So I try to get a good, night's sleep, and obviously eat healthy and wake up about 5:30, 6 o'clock each day. That way I can meditate and really think about, what my goals and objectives are, for that day.
Yeah. Yeah, that's awesome. I've looked at you and what you're doing too, and I'm, similar, a lot further down. I believe you got a long way to go, Jeremy, to where you're at, but same thing, right? I still working at W-2, started my business, Optimal Equity Group, coaching T-ball, kid, it adds up, and it's easy to get overwhelmed, right? And I heard a quote the other day, take control of your day. Don't let your day take control of you, right? Which it can happen quick, when I'm waking up and even just your phone, right? Waking up and looking at your phone and letting everything on your phone consume what you're doing, it's just a different shift. So I love what you talked about, the meditation. I try to do that as well. And it gets me centered for the day and helps me be able to, to complete the tasks that need to be done. But like you said, got a long way to go. I have all these good intentions and ideas sometimes, but putting them to action is a little different. But I think it's the right intent too, and just keep our feet moving. And all right, and the last and final question, if you could be remembered for one thing, what would that be?
Yeah, I would say that would be, really serving others. I think it gives me a lot of purpose. It gives me a lot of joy, to know that, I'm making an impact, in somebody else's life. I've had the pleasure to give the eulogy speech at a number of funerals, okay, of people that were close to me, right? And what's oftentimes, unfortunately, not told is the things that are told at a funeral where you really regret not telling that person while they were alive, the type of impact that they had on your life, okay? So the reality is that, we're all having either a positive, negative, or a neutral impact on those that are around us. And for those positive impacts that we're having, you may not even know the life transformation you're having in somebody else's life by the way that you breathe life into them, the words you say, the way that you conduct yourself around others, it all matters. Okay. You don't really ever know the totality of that impact that you can have on somebody else's life by serving them.
Yeah, no, that's great. And, it's just, leave this world a little bit better than you found it. Right. And just trying to add to, and you couldn't, I can't say it any better, Jeremy. So thank you for that. And love what you're doing too, as well. And excited to be along with you on this journey. So if you could, though, tell listeners a little bit or tell where they can learn more about Starting Point Capital, how to connect with you, and the social media there.
Yeah, absolutely. Thank you for the opportunity. So you can connect with me on LinkedIn, just under Jeremy Dyer. I do post a few times out there. Happy to connect with anybody that's listening to this episode. You can also head over to our website, which is startingpointcapital.com. Again, that's startingpointcapital.com.
Awesome. And be on the lookout for that book being published. I'm not sure if we have the title quite yet, but we'll be on the lookout there. What, next year, Jeremy, or?
My goal is by the end of this year.
End of this year. All right. Awesome. Well, cool, man. Well, I enjoyed our conversation today, and thanks for being on the show.
Yeah, thanks for having me.
Thank you for listening to the Optimal Wealth Podcast. If you enjoyed this episode, please be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, be sure to optimize your results and take massive action on what you have learned here today. For more, visit optimalequitygroup.com.